You're under 25, you just got your license, and the insurance quote you received is more than your rent? Nobody told you it didn't have to be that way. Stay right here, because in the next few minutes, you're going to find out exactly how young drivers are cutting their car insurance bills in half, legally, fast, and without any experience required.
Welcome back to Under 25 AutoShield, the only channel built specifically for young drivers who are tired of getting ripped off by the insurance industry. If you're new here, this is where we break down everything the insurance companies don't want you to know in plain language so you can keep more money in your pocket every single month. Make sure you're subscribed right now because we drop new money-saving content every week and you cannot afford to miss it, literally. If you're under 25 and you've just looked up car insurance prices, you probably felt your stomach drop. Young drivers pay some of the highest premiums in the country, and insurance companies aren't shy about it. But here's the thing, there are real, proven ways to bring that cost down fast, and most young drivers don't know about them.
Let's start with the biggest one. The way you shop for insurance matters more than anything else. Most people go to one company, get a quote, and just accept it. That's a mistake. Insurance rates vary wildly between providers. The exact same driver with the exact same car can get quoted $200 a month from one company and $90 from another. Use comparison sites to get multiple quotes at once, then go directly to the insurer's website, because sometimes they have better deals there than what aggregators show. Next, talk to your parents. If you're living at home or even just using their address, being added to their existing policy as a named driver is almost always cheaper than getting your own policy from scratch. Family multi-car discounts are significant. Insurers reward loyalty and bundle deals. If your parents already have a solid history with a provider, you benefit from that reputation too.
Now let's talk about the car you drive. This is something young drivers get wrong constantly. That fast, flashy car with a big engine, it will cost you a fortune to insure. Insurance companies price based on the cost to repair the car, the likelihood of it being stolen, and how powerful the engine is. A modest, reliable car with a small engine, good safety ratings, and a low theft rate is your best friend when you're trying to save money.
Before you buy any car, look up its insurance group rating first.
Here's one most people skip entirely: telematics, also called black box insurance. This is where an insurer fits a small device in your car or uses an app on your phone to track how you drive. Speed, braking, what time of day you're on the road, all of it gets monitored. If you're a careful driver, this can cut your premium dramatically. Young drivers who use telematics and drive well often pay less than half what they'd pay on a standard policy.
The catch is obvious. If you drive recklessly, your premium goes up. But if you're genuinely a safe driver, this is one of the fastest ways to prove it and get rewarded for it. Paying annually instead of monthly makes a real difference too. Insurers charge interest when you spread payments across the year. That interest adds up to sometimes 10 or 15% extra on top of your base premium. If you can afford to pay the full year up front, do it. If you genuinely can't, even putting down a larger deposit reduces how much interest you're charged overall.
Your excess is the amount you agree to pay toward any claim before the insurance kicks in. Raising your voluntary excess lowers your monthly premium. If you're a careful driver and you're confident you won't need to make a claim, agreeing to a higher excess makes financial sense. Just make sure the amount you set is something you could actually afford to pay if you did have an accident.
Don't ignore discounts that are sitting right in front of you. Have you completed a defensive driving course or an advanced driving qualification? Many insurers reduce premiums for young drivers who can prove additional training. It shows responsibility and lowers their risk assessment of you. Some providers have specific schemes for young drivers who complete accredited courses, so it's worth calling your insurer directly and asking,
Where you park matters too. A car parked in a locked garage overnight is statistically far less likely to be stolen or damaged than one left on the street. If you have access to a garage or a private driveway, tell your insurer. It costs nothing to update and can reduce your premium immediately.
Finally, only pay for the cover you actually need. Third party is the legal minimum and covers damage you cause to other people and their property. Third-party fire and theft adds protection if your car is stolen or damaged by fire. Comprehensive is the highest level and covers your own car too. Counterintuitively, comprehensive cover is sometimes cheaper than third-party for young drivers because the type of driver who chooses minimum cover is seen as higher risk.
Always get quotes for all 3 levels before deciding.
Getting cheap insurance as a young driver isn't about luck. It's about being strategic. Compare aggressively, drive carefully, choose the right car, and take advantage of every discount.